Okay, welcome everyone. We are live here at the Patient Investor Workshop, and I saw we already had a few people dropping into the chat to introduce themselves. Hello, Dennis. Good to have you here, my friend. And I see that we've got a few more people jumping in as well. I'm going to give it just a couple more minutes because typically it just takes some time. Everyone's jumping in. They're getting placed into the room here. And while we're waiting for everyone to join us, just wanted to cover a couple of logistics first, a couple of groundskeeping? No, that's not what I want to say. A couple of housekeeping items. And that is just simply around how to interact, how to get the most out of this session. You'll notice that you do have a chat feature that you can jump in and write a message. You can write a question, a comment, some thoughts you have at any point during the presentation. If you have a question, I will see it pop up in the chat. I will do my best to answer those in real time. However, I might not get to answering those questions until later on in the session. And sometimes I'll respond like this via audio, and sometimes I will just respond back in the chat. Either myself or a member of my team will respond back to you in the chat. So just keep that in mind. And to kick us off here on the session today, what I'd like us to do, jump in that chat and just tell me, hey, for you, what is that big goal that you have in mind, that number that for you is like, I have arrived, I can retire, I can come and go as I please. I know I will have more than enough to live on. I can afford the exact lifestyle that I want, and I will never have to worry about money again. Okay, everyone's very different in this regard. I work with people who say, you know what, Brandon, all I really need is like 2 million, and then I can live comfortably. I don't even like the fancy houses and cars. I just want to like live my lifestyle over here. And that's totally fine. Other people are like, no, I want the 100 million. Like I want the 200 million, whatever it is. Just go ahead and drop in the chat and let us know what your big financial goal is. That could be an 8-year goal. It could be a 10-year goal. It could be a 20-year goal, whatever that might be. And throughout the workshop today, when we get to the example math section, I'm going to show you how that number is actually achievable through the world of decentralized finance. That's exactly everything we're going to be talking about here today. As the slide says, leveraging value investing strategies in the world of decentralized finance. We are going to take the best of the best investing strategies that already exist elsewhere, and we are going to apply them to the world of decentralized finance. We are going to get away from all of the hype and these wild promises that are out there, 100x in 3 months and some of these things. And I'm going to walk you through some of the mistakes I made early on in my cryptocurrency investing journey so that you can avoid those silly mistakes. And you'll see they're actually, I'm embarrassed to admit them, but they're so easy to avoid. And so what I want to do is just share kind of some of the stumbling blocks that I went through so that you don't have to go through those same things as well. Brian says, enough to spend the rest of my life sailing around. There you go. That is a killer goal because not only is it a specific goal, but it's attached to something that you really want to do, right? Like nobody just wants $10 million to have it in their bank account so they can stare at the screen and go, cool, I got $10 million. Typically, there's something else associated with that big goal that is for you, that for you represents your freedom lifestyle. Grasshopper, I don't know your name, so I'm just going to call you Grasshopper, says 1,000 Bitcoin is the goal. Perfect. That's something we'll dig into on future sessions. How you don't necessarily need a US dollar goal, especially if you have a big picture belief in where cryptocurrencies and decentralized finance as a whole is going in the long term. So thanks, guys. Thank you for sharing. Really appreciate it. I wanted to spend just like maybe a minute or two introducing myself. We'll get more into me and my background when I get into the top 5 mistakes that I made. But yeah, first off, my name's Brandon. If I haven't had a chance to meet you yet, I'm sure that if you are here, it's because we're connected on social media. It's because maybe you saw a post or an ad on Facebook and you clicked on it and it sounded appealing to you. You wanted to learn about some of these strategies. I've been in the world of decentralized finance for a few years now. And when we get into a little bit later on in the presentation, you'll see why I believe there are no necessarily experts in this space. There are just people who understand how to leverage tried and true principles of investment strategy in order to create everything that they want in their lives. So with that said, let's dig into it. First of all, before I get to the live demo where we're going to set up a yield farm, like I'm going to show you the actual strategy live in action. And then we're going to go check on, hey, how did this strategy play out since February 19th? Because on February 19th, I put in, I made a demo farm, and we're going to check the progress of that demo farm. Okay, so first off, the top 5 crypto mistakes. If you want to be in this game long term, these are the top 5 things that you want to look out for and be very aware of. Number 1, I invested in projects that I didn't understand early on. Now, what I mean by that is originally I was just chasing all of the meme coins. Okay, some people call them shit coins. Basically, these are the one-dimensional projects where it's just a buy low, sell high. If you can get in early, someone else gets in late, you can sell, you can make a profit. And you know what? There are people who are very, very good at that, and respect to them. It is a hard game to play. But what I mean by this is I was just throwing money at stuff, and I did not understand what I was putting money into. One of the foundational rules of investing, in my opinion, is that you, at the very minimum, at the very least, you want to understand what it is that you are getting into, because the investment game becomes insanely psychological and emotional. And if you don't understand the thing that you're getting into, you will sell at the worst time. It's like people who invested in Bitcoin 10 years ago, the ones who understood what it was, they just held on to it for 10 years, and now they have all the money they could ever want or imagine. The people who didn't understand what Bitcoin actually was, they invested $500, they made $1,000, and they cashed out and went, cool, I'm a great day trader, I made $1,000. And obviously in hindsight, we all go, well, that sure was short-sighted. But I'm here to tell you today, I made that same mistake, not specifically with Bitcoin, but in the sense that I put money into things I didn't understand. And very often that led me to making bad decisions around when to hold, when to sell, when to buy more, that sort of thing, which ties right into number 2 was chasing more without a plan. When I first got into the meme coin journey, I was just trying to put a bunch of money in a bunch of stuff, and I just wanted more. I did not have an exit strategy. The best story that I can tell you around this was a very specific project. I won't mention the name because I'm sure there are a few people who may have gotten in on it back in the day too. And I put $2,000 in. Okay, not a lot. I just put a little bit in because I thought, okay, this one could go somewhere. And over the course of the next week or so, it did its moonshot thing, right? Which is that's the hypey side of crypto, right? It did its moonshot thing. And eventually it grew to right over $43,000. Now, you might be thinking, Brandon, that is over 20x on your money. Why wouldn't you just cash out right then and there? And I'm telling you, it was because I just wanted more. I thought, oh, but what if I could get 200,000? What if I could get 400,000? These were the thoughts going through my mind. And I'm here to just admit flat out, I was operating from a state of greed. I'm sure you've heard of FUD, fear, uncertainty, doubt. Well, the G is in there too, fear, uncertainty, doubt, and greed. And when you operate in greed, you get wrecked. So I held on to it. I didn't sell it. And of course, it plummeted back down to earth like almost every one of these meme coins or shit coins ends up doing. And at the end of the day, I was able to sell and get my money back. So I didn't lose anything, but I lost out on what could have been a much more lucrative trade simply because I was chasing more and I didn't have an actual plan. When we get to the example math, I'm going to show you what is, in my opinion, obviously none of this is financial advice. It's just my opinion on crypto, and you're free to adopt it or reject it however you see fit. But I'm going to give you what I think is a very reasonable goal to shoot for that doesn't involve 40x, 50x, 100x moonshot kind of coins, but will still get you to where you want to go over the long term. And if I had been operating with that mentality when this happened to me, I would have been able to cash out and I would have made a very profitable trade in that particular situation. Number 3, I had a one-dimensional perspective on DeFi. And what I mean by that simply is I didn't understand, this is back in the day when I was first getting started, I didn't understand that there are different types of projects. Okay, I just thought everything's a coin. I'm buying a currency. I didn't get there's currencies, there's treasury assets, there's DEXs, there's launch pads, there's insurance, there's oracles, there's layer ones, there's all these different categories of projects. So when my friend said, hey, I got a hot tip on Chainlink, I was just like, okay, I'll buy Chainlink, right? Number one, I didn't understand what it was. And I held it for a little bit and then I sold it and I was like, hey, cool, I made a little money. But I didn't understand the big picture, which is the category that Chainlink fits into as an oracle, meaning it's a way to validate off-chain data on the blockchain. And if you understand what that means, you understand that that's going to be a huge piece of decentralized finance forever and ever. Like, it's not going, maybe the company Chainlink goes away, unlikely, but even if they go away, someone else is going to build a better oracle. And that's something that's going to be very integral to the development of this entire ecosystem. So I just thought, buy the coin, sell the coin, buy the coin, sell the coin. That was it. And that was all that I did. And again, that caused me to miss out on a ton of gains. Later today, when I show you the actual strategy in play, I'm going to show you why we're selecting some of these types of projects categorically and where they fit into the bigger picture. Okay, number 4, the Lone Ranger approach. This was me trying to do it on my own. And other than like a buddy here and there, just like saying something randomly like, oh, buy Chainlink, oh, try this one, oh, do that one. Otherwise, I was just 100% on my own. Why do I not recommend that? Because it's a lonely game, and I need it, you need it, we all need community. We need other people that are along this journey with us to help fill those gaps where maybe we're missing something that we legitimately need. One of the best stories and examples I can share about this in another mastermind group that I am a part of, there was a member of that mastermind group, crypto investing mastermind group, and he ended up getting his wallet hacked. Now, if you know anything about cryptocurrency and security, that's really hard to do. But it so happened that the hacker had access to his physical, he had a cold wallet, a physical wallet, and they had access to that and the laptop, and they managed to hack his seed phrase and get in and take away his crypto to the tune of $500,000. So needless to say, that's not a small chunk of change, especially when someone is coming in and just yanking it right out from under you. Now, the good news is he was able to recover that eventually because he announced in our mastermind, hey, does anybody know someone who can help me out with this type of situation? Luckily, there was someone in the group who said, yeah, I know a guy personally. He works for the FBI in the cryptocurrencies division. Connect with him. They were able to find out where the money went because on the blockchain, every transaction is recorded. You can follow the breadcrumbs, find out who it was, and lo and behold, he was able to recover his money. So Lone Ranger approach, nothing will get you wrecked faster. Instead, always go along this journey with a group of people, with a community. And that's why I love hosting sessions like this, because we get to all learn together and support one another. And finally, number 5, only following one voice, the crypto expert myth. Okay. And what I mean by that is, I don't believe there's really any like experts in crypto. Crypto just simply hasn't been around long enough. There's people who try to pose as experts and they'll tell you like, oh, I know which coins to call. I'm always calling the right coins. Follow me, follow me, follow me. And I'm more like, no. Like, yeah, I got some good things to share with you and to teach you, But by no means do I think I should be the only voice in your head about cryptocurrency and investing. I'm going to show you some really great strategies later on, but I'm also going to encourage you to connect with other people who are also leveraging these same strategies and start to, this is kind of like number 4, right? Not the Lone Ranger approach, but connect with other people who know what they're doing in this world, rather than picking your guru, picking one talking head on YouTube and just like, oh, I'm just going to listen to this guy and like do everything that he says and, you know, buy all the coins that he says to buy. It's silly. It's the hype approach. It's the day trader approach. And I promise you, no one will be right 100% of the time, which is why you'll need to evaluate what strategies are being used and if they are responsible strategies leveraging stable and reliable assets that will appreciate over time. So let's get into the good stuff. I'm going to share with you a few basic principles. These are the underlying principles that shape how you develop your lens through which you can evaluate projects for their long-term yield potential. What I mean by that is, rather than some guru or some expert, right, pretend expert just tells you, oh, buy this, oh, buy that, oh, buy this one, and you're just like believing everybody. Instead of that, let's develop a criteria. Some people call this a heuristic, right? The big fancy word for it. Let's pre-decide on what our decision-making criteria will be, so that any projects we're thinking about, considering investing in, we can quickly run them through these filters, if you will, so that we're able to evaluate whether or not they are actually worthwhile investments, worthy of our time and attention, and ultimately our hard-earned dollars. Number 1, I ask myself, who is leading this project? So you got a couple layers here. Number 1 is that sometimes in the cryptocurrency world, people are not what they call doxed. They're anonymous. You have no idea who they are. I'm more interested in projects where, if I don't know the person personally, I'm at least able to connect with them and understand who they are and what they're all about and see their track record, especially their track record online. But ultimately, my preference, personal preference, right, this is my opinion, personal preference is I like to work with people who I actually know in real life, which is one of the projects I'm going to show you. People that I've met, I've had a chance to experience who they are as a real life person. And because who's leading the project ultimately determines the success of that project. A cryptocurrency coin is not just a thing that exists. It's kind of operates like a business in a lot of ways. And in the same way that if a business does not have a strong leader, they will ultimately fail. The same way that a cryptocurrency project, if they do not have strong leadership who know what they are doing, they will ultimately fail. So we have to ask, who is leading this project? Are they doxed? Are they a good leader? Can they steer this ship long term? Because I don't want to get into the projects that are going to pop up and then die 6 months later. I want to get into the ones that make a meaningful contribution to the ecosystem and will be around long term. Which is number 2. Where does it fit in within the ecosystem? By ecosystem, I mean, number 1, where does it fit in the broader scope of the cryptocurrency ecosystem? There's lots of different categories where it can possibly fit in. Is it doing something special and unique? And then where does it fit in within the smaller ecosystem? You'll find a lot of these projects just try to exist independently of anything else, which is silly. This is a decentralized space, meaning that you can try to go it on your own, but more likely you'll go farther and do better if you're able to work with other projects. And it's a bit of like a rising tide lifts all boats type of mentality. The more that you can create your own little micro ecosystem within the broader ecosystem, the more likely you are to exceed. Because then if this project over here, if the transaction taxes support this one over here, and then when this one gets bought or sold, it supports this one over here, and this one has reflections for, and they're all working together, then all of them are more likely to succeed, as well as the individual projects that you might be invested in. Number 3, is it useful for me? This might seem obvious, but I think at the very, very, very least, I would want to be able to tell if it's useful for any humans, but I also want to know, is it actually useful for me? One of the projects that I've been looking at recently, I'm not going to say the name because I don't want it to be misunderstood of like, hey, go buy this coin. But it is one of these projects that is a worldwide peer-to-peer money sending system. Okay, it's basically like the PayPal of crypto in a way. And in my opinion, anything that starts as a peer-to-peer, transaction, you send me money, I send you money, eventually could potentially become some form of payment processor. And anytime a project gets involved on that side of things, like, it's going to be big. So it's just an example of one that I say, is this useful for me? And I download the app and I take a look at it and I go, wow, this actually is really useful for me. I think it would probably be useful for other people as well. And on the flip side, if I'm thinking, hey, I want a place that is a store of value that isn't Bitcoin, because Bitcoin is a pretty good store of value, but it's just so volatile. It's all over the place. I want a stable store of value. Let me take a look at what are the available treasury assets, because that's where I want to put the money that I'm saving and investing long term. So again, is it useful for me? If it is, I can keep looking at it and go through the next step to the criteria. Does it create real world value beyond the greater fool theory? Now, the greater fool theory, if you don't know, just real quick, it's the premise that I'm only going to buy this thing now because I think I can sell it to someone else for more later. That person's only going to buy it from me because they think they can sell it to someone else, and they think they can sell it to someone else. It is the Bored Ape Yacht Club. Okay, I'm not sure if you've seen these or not, but all the pictures of monkeys smoking cigars, hanging out, wearing hats, doing whatever. Yes, it's fun and it's silly, but the only reason people keep buying those is because they think they can sell it for $2 million. And that guy buys it for $2 million because he thinks he can sell it for $3 million. And it just keeps going and going and going and going. That is the principle of the greater fool theory. And it's very prevalent in crypto, especially amongst the one-dimensional meme coins, the shit coins, because they don't have any other function or utility beyond, hey, let's trade this and generate a lot of volume and make some people rich while a bunch of other people get wrecked. I'm looking for projects that go beyond that and actually create some real world value and have usefulness. And then finally, number 5, does this fit? How does this fit into my long-term strategy? And that's why I asked you all at the beginning, hey, what's that big picture number for you? And if you're just joining us, if you just jumped in to the presentation here, go ahead and drop in the chat, hey, what's that big goal for you? What's that big number that is ultimately like, that's going to get me everything I could ever want or need out of life? So if I say, all right, my goal is to have 50 million by the time I'm 50 years old, cool. If I'm looking at a project, how will this project facilitate me getting closer and closer incrementally in a responsible, reliable way to that ultimate big picture goal? Okay. Now, some people look at this, and this kind of fits into the mistake I talked about later, right? Chasing more without a plan. Some people might say like, well, it gets me more, so it gets me closer to that. That's not what I'm talking about. I'm talking about, does the asset that you're thinking about investing in help you get to the goal, but without relying on some 100 or 1000x moonshot? Okay. Does it incrementally get me closer and closer to where I actually want to be? All right. I'm going to give you the example math, but first I want to run you through the profit codex, which is really just 5 column pillars, column keys, column whatever you want, 5 secrets. I don't care. These are the 5 things that are going to help shape how we view the math and then ultimately the plan, which is building farms that facilitate you getting to where you want to go. Okay. Number 1, this is the foundation, the pillar, the key: research, patience, restraint, and fewer moves equals predictable profit. You'll notice that this, even just from value number 1 of the profit codex, this goes entirely the opposite direction of the day trader approach. Okay. I fully acknowledge there are people out there who are brilliant at day trading. Again, this is just my opinion. I want a strategy that I don't have to manage 2 to 3 hours a day, and I don't want to be staring at screens all day. I want something that I can set up, I revisit maybe 2 to 3 minutes a day, and ultimately it's just rocking and rolling without me having to constantly micromanage it. So I'm going to research, I'm going to stay patient, I'm going to exercise restraint and not just like ape into everything that's cool that I see out there. And I'm going to make as few moves as possible to still hit my goal. More moves always across the board. This has been proven statistically. More moves always equals less profit. So I'm looking for something that I can make fewer moves and exercise restraint. Number 2, get a quick drink here. Number 2, ecosystems create portfolio stability. This is back to what we talked about before. The more a project interacts with and plays well with others, the more likely that project is to succeed, and the more likely the entire ecosystem is to succeed. Number 3, asymmetric risk-reward ratios reign supreme. I didn't mean to make that an alliteration, but there's a lot of R's there, so it sounds kind of fun. Asymmetric risk-reward ratios reign supreme. Say that 10 times fast. Now, what I mean by this is the asymmetry of risk-reward is simply acknowledging that I want as little risk as possible with as much upside as possible. But I do not want to I don't want to elevate the risk for the sake of more upside. I want to hold that risk as low as possible so that if I'm able to put in $10,000, then that $10,000 could grow to 40, 50 million and beyond without the risk that would normally be associated with those types of returns. Sounds simple conceptually, but it's actually hard to find projects that facilitate this principle. And that's related to number 4, which is remove downside versus chasing upside. I don't want to chase more and more upside, like, oh, I'm going to do this one because it has a 50x potential and this one only has a 10x potential. That's not what I'm chasing. Instead, the way savvy and responsible investors think is all I'm going to do is I have my big chunk of capital here, whatever you're starting with, it doesn't matter. It could be $500, it could be $5 million, but whatever I'm going to do with that money, I'm just going to constantly work to remove downside, domesticate risk, remove downside, domesticate risk, so that I can sleep easy at night knowing that I'm on my way to my goal. Like I said before, the investing game is 99% psychological and emotional. Yes, there's actual like strategy and mechanics involved, but it's mostly psychological and emotional. If you can't sleep at night, then you're not going to stay in this investing game long term. But if you know that your investments are safe and reliable, you'll sleep easy and you can just slowly over time remove more and more risk. And finally, number 5, productive assets versus non-productive assets. Okay, this is something, I mean, everybody, Warren Buffett talks about this a lot, but any investor would talk about this. You have a choice. Now, personally, I believe productive assets are better, but a productive asset would be, I mean, we're going to talk about crypto yield farms here in a second, but a productive asset would be like an actual farm, right? You have your land, that's the asset, but the land produces something else. You put soil, you water it, sunlight, and you grow, let's say, potatoes, you grow corn, you grow soybeans, whatever. And you take that crop and then you can do something else with it. You can store it, you can sell it for money and then buy more land and grow your farm, which would be your primary asset. But the point is that asset has something beyond just what it is. Same with a business. A business is a collection of people and systems, but it produces more than the total of the individuals of that collective. So it's a productive asset versus a non-productive asset would be something like gold, for example. And yes, gold might appreciate in value over time to beat inflation, but if I buy 3 kilograms of gold today, 20 years from now, it's still going to be 3 kilograms of gold. It hasn't produced something else beyond the thing that it is. So in my opinion, we want to be focused on productive assets in order to maximize our profit potential. So the 12-year strategy and some simple math. This is where it gets super fun. And I'm going to, let me stop this slide for now. And I'm going to share my screen with all of you and kind of rearrange a few things here. Cool. Okay, so you should be able to see that. If you see me looking off to the side, it's because I got 2 screens going here. Now, what I want to show you is the 12-year strategy and some example math. By no means am I saying you must have a 12-year plan. Okay, for some people it's 6 years, for some people it's 20 years. This is meant to be just an illustration. This is not meant to be, hey, it has to be this way. It's definitely not a guarantee or a promise in any way, shape, or form. I mean, in the investment world, crypto or traditional markets, no one can guarantee you anything at any time. I hope we all know that. It's just a healthy reminder. So some example math here. Let's say I'm starting with 10,000. You can start with 10,000. You can start with more or less, just examples, okay? And the goal in this approach is to double our money every year or better, okay? But the double your money every year in crypto, that's like really conservative because everyone else is like, oh, 10x, 20x, 50x. Double your money, super conservative. But compared to traditional markets, that's insane, right? Traditional markets, 8 to 10% a year on average over 20 years over time. Like that would be phenomenal. But it doesn't account for like a 2008 where everything crashes and you lose a decade in order to break even again. So all I'm acknowledging is that the 2x, if we double that money, again, let's be conservative, a 1 year time frame. I'm now going to have 20,000. Simple enough, right? Okay, well, let's do it again. Let's stay in this game. I like those returns. Then I'm going to stay in the game in the next year. That becomes 40,000. Again, just an example. If I do this for 12 years, I end up with 41 million. Now, why that number? Why did I choose 12 years and 41 million? A little bit random, but also I'm just acknowledging 41 million for most people. Maybe there's somebody with loftier goals. For most people, that's going to be more money than you could ever want or need or figure out what to do with, okay? So 41 million, and that's if it doubles every year for 12 years. Here's what I'm getting at, because I'm going to show you a yield farming strategy where you can start to think about daily yield and monthly yield, okay? So let's say, again, this is like my baseline. Let's say I start with that same $10,000 and I want to get, let's just call it a 10% return, but I want to get a 10% return in a month. Okay. So at the end of the first month, I'm going to have 11,000. Okay. And then at the end of the next month, I'm going to have whatever this comes out to 12,100 or something like that. And then the next month, the next month, the next month, the next. Okay. After your first year of doing this, 10% per month, you actually end up with over 31,000, which is more than 3x, okay, at the end of the year. The only reason I'm saying this is acknowledging, as an example, even if all you get this month in crypto, even if all you get is a 10% gain, you're still on track to be better than doubling your money every year. And doubling your money every year in 12 years gets you 41 million. Okay. The reason I say this is because we want to put it into perspective. People see a 10% return on crypto. They go, oh, I put in 10,000. It's been a month. I only have 11,000. That's phenomenal. If you make a 10% gain in a month, then you're going to be on track for over 3x on the year. Again, that assumes consistent returns. Now, the reason I put this into perspective is because the original demo wallet that I put in on, this was back in February 19th of this year, 2022. Okay. I put in 3,000, and in just the first 6 weeks, well, let's do the 1 month mark first. In 4 weeks, it was already up. I think at that point it was something like 70%, 70 or 80%. Okay. And then at 6 weeks, it was up 108%. The reason I'm sharing this is because some people might look at those gains and go, oh, only 70%. But in that time frame, that's insane. Because even if all I had gotten was 10%, which it was far beyond that, even if all I had gotten was 10%, I would still have been on track to triple my money every year. And my long-term goal is just to double my money every year. You see where I'm going with this? Like, let's acknowledge when we're able to do something that's insanely good, even when on a shorter term time frame, it kind of go, oh, 10%, that's not that good. Yes, it is. It's very, very good. Now, let's break it down even further. And by the way, this is the farm that I'm going to show you how to set up. Okay. I'm not going to promise you that you'll hit 108% in 6 weeks. You might, it's likely, but I'm not going to promise you that you definitely will. But even if all you get is 10%, and currently everyone in the mastermind is on track to exceed that by far. Even if all you get is 10%, you'll be fine. This is the farm I'm going to show you how to set up when we get to the demo portion of our presentation today. Okay. All right. So then we're breaking it down even further. Let's take the same 10,000 and let's say, oh, I'm yield farming. I want to see what my daily yield is. Okay. A little obsessive, but I'll work with you. 0.25%, okay, not 25%, 0.25% daily. Okay, so that means after the first day, this 10,000 would be, what does that come out to? 10,000, because 1% would be $10, right? Did I do that right? No, 1% would be $100. So 0.25% would be 25. There we go. Got it. I do math good. Okay. So after 1 day, it would be this much. And then it keeps compounding. It keeps growing 0.25% of a day, 0.25% every day. At the end of the year, I forget the exact number. It's something like around 24,000-ish. Okay. Meaning I am still ahead of my big picture goal, which is to just double my money every year. And like I said, currently everyone in the mastermind is on track to exceed that timeline. It's just that when we set our sights too high, we start to make poor decisions. So we set our sights for a reasonable return that's still going to get me everything I want or need, and that puts us in a position of power to make calm, well thought out decisions. Psychological and emotional game, almost 100%. All right. So even if all I got on a daily basis was 0.25% compounded daily over the course of the year, I am still going to be on track to exceed my original goal. All right. Where do we go from here? Let me get this presentation back up and going. There it is. All right. I'm going to demo for you here in just a little bit how to build that farm that I talked about, the farm that is getting people those kinds of returns. The same farm that I built back on February 19th and that in 6 weeks got 108% return. Okay. What I want you to understand though, before I jump into creating the farm, we're going to be talking about creating primary assets, secondary assets, and tertiary assets, which is understanding how to leverage this strategy. Because it's not just a thing where I go, oh, I bought the coin and I sold the coin. That's one dimensional and it's a non-productive asset. Instead, we're going to build the farm, pair assets, and that yield farm is going to produce other assets, and those assets are going to produce other assets. So it's yield on yield on yield, which is partly what makes this strategy so compelling, because we're going to aim for that 2x on the primary and secondary. So anything we get on the tertiary side, you have the option to sell it for additional profit, maybe take a little paycheck starting around 12-month mark or so if you choose, or you can compound it and just get to your goal faster. Okay. I'm going to diagram this all out for you. So stick with me. If you've never seen this before or been exposed to this, it is a bit like drinking from the fire hose. I don't want to go like too slow. I'll try to go slow-ish so you can retain everything. But I also want to acknowledge, like, you might have to come back and watch the replay on this just to make sure you understand this portion of it, because conceptually, this is what will give you the peace of mind that you need to sleep easy at night while you are invested in this type of strategy. Okay. So primary assets. This means we are going to be using liquidity pairs. I'm actually going to show you specifically what that is. But in a nutshell, a liquidity pair means I take this asset, I mash them together. I've created now a liquidity pool token. I'm going to stake that. What am I doing? I am providing value to a system. In this case, it is the system of a DEX, a decentralized exchange platform. A DEX makes money off of trading fees. Therefore, it stands to reason that the better a DEX can facilitate trades, the more profitable and useful it is as a tool, and more people will want to use it, and it will get better and better. How does it make trades super easy and smooth? Well, it needs liquidity pools to provide that. And so basically the DEX says, hey, everybody in the world who's into crypto, why don't you help us provide liquidity, stake your assets here, and let us use those to facilitate transactions. And as a result, we will reward you for that. Okay, that's going to be the secondary asset. The easiest real world example that I can, well, there's two really that could come into play if conceptually this isn't landing. Number one is if I put money on deposit at a bank, then that bank goes and lends that money out and makes money off of the lending. So by me giving my money to the bank, I'm actually providing them value. Now, back in the day, banks would like return you interest on that money every year. This day and age, it's like, 0.1% every year or something silly. It's like ludicrous. But back in the day, that was the premise, is you could earn 12, 13% yearly on your money at a bank because you were giving them capital and they could go loan it out and make more money on it. The other real world, and these are imperfect metaphors, but they kind of explain what's going on. The other real world example is when a business wants to have their IPO, their initial public offering, they want to offer their stock for sale to the world. Well, they can't just transact directly with every retail consumer. They instead get these big institutional investors to provide massive millions of dollars worth of liquidity into a pool so that people can transact quickly and safely. That is in effect what we are doing, but we're doing it now in a decentralized context. Okay. So what you see here, the next line, stable asset plus DEX, these are examples of what you would build as a primary asset. Okay. Number one would be a stable asset plus a DEX. This would be, for example, I'm going to provide BUSD and pancake swap cake. I'm going to provide those two tokens, pair them together, provide liquidity to the system. I'm going to get a small return for that. Another example, which is the one that I'm going to show you later, a stable asset plus a treasury asset, meaning a stable coin like a BUSD, and then a treasury asset like a true store of value that will gradually appreciate over time and provide investment opportunities and lending opportunities for investors. A treasury asset, a stable asset, pair those together, boom, provide liquidity to the system. The system says, thank you for adding value to our experience. Here's a reward for that. That reward becomes your secondary asset. Or, for example, a DEX or a layer one. The DEX could be something like a pancake swap or a night swap. And then the layer one would be your BNB, right? The native token of the Binance Smart Chain. That is the fuel that allows people to transact on that platform. So you've got the platform, then you've got a DEX, which needs the platform to exist. It is the platform upon which the DEX operates, and the DEX facilitates transactions, people swapping and trading cryptocurrency assets back and forth, okay? So in my opinion, again, there's all kinds of different ways you could build out your primary assets. In my opinion, one of those three will be the most reliable and sustainable long term, okay? I'm going to show you the one example I'm going to give you today is going to be a stable asset plus a treasury asset. And that's the one I'm going to recommend that everybody start with. But again, as always, not financial advice. It's your money. You do whatever you want with it. It's just that in my experience, these are the best places to begin. Okay. Secondary assets. This is what you get rewarded. And in the example I'm going to give you, it's DEX tokens. Okay. It's going to be the DEX token of NightSwap, which is a decentralized exchange platform. You provide value to the system. You make it easier for people to trade on it. As more and more people trade on it, they get more and more transaction fees. So they like the fact that you are helping other people trade smoothly and easily on their platform. They typically will have, if they're healthy, they'll typically have a stable-ish value, maybe a little bit of fluctuation, but they're not designed to be volatile. They're not designed to be moonshots, which is why as a secondary asset, they are perfect because they're stable and they slowly appreciate over time. And they are minted, meaning more and more of them are produced over time, which is why you want the price to remain relatively stable with slight appreciation rather than the moonshots, which skyrocket. And they can be yielded and they are stakeable for other assets. So let me turn off this slide again and show you what I mean. Okay, so we get back to our diagram here. We're going to start with primary asset. And by the way, as I'm going here, if you have questions, drop them in the chat. Okay, I know I saw a lot of people were jumping in like after the fact, which is totally fine. But drop some questions in the chat as they come up. We'll also have a little Q&A at the end as well, so don't worry about that. Or there's also like a little hand icon somewhere. I think it's a speak or raise your hand or something like that. I think it's speak. You can click there, and then if you want to jump on like video or audio, you can do that as well. But probably at this stage, the chat's going to be easiest. You can just drop your questions in there. I'll get to them when I can. Like I said, it'll either be me responding here verbally. I might respond in the chat, or someone from my team might jump into the chat and respond back to you as well. So here's our diagram. Primary assets. This is going to be our very stable assets. And the one I'm going to show you here is a liquidity pair. It's called Guard BUSD. We're going to pair those two assets together. And this is going to be my primary farm. When I build this farm as a liquidity pool, it provides value and will produce for me a secondary asset. And in the example I'm going to show you, this will be a DEX token, DEX, a decentralized exchange platform. That's a DEX. And specifically, it's going to be the Knight token. Okay. So while my primary asset is very slowly and gradually appreciating over time, remember 2x per year, ideally we would be hitting that marker just here. But as a worst case scenario, we'll be hitting it with the primary and secondary combined. And like I said, the example farm, I built it back on February 19th. 6 weeks later, it was at 108% gains. Okay, so it had more than doubled already after 6 weeks. Meaning simply, it's ahead of the game. Okay, so the secondary assets, this will be a collection of DEX tokens, okay? This slowly rises over time because at first you don't get very much. It would be like the principle of if I have 100 acres, I get a little bit of, potato from that 100 acres. But then if I go and sell the potato and buy more land, now I have 110 acres. Now, not only do I get more potato, but the rate at which I'm getting potato also increases. And then those secondary assets can be staked to yield tertiary assets. And one of two things will happen. Either you will cash these out and take a little profit for yourself as long as you're still hitting your big picture goal. You can take a little money out along the way. That's fine. So you can get some profit there. Or what a lot of people like to do in order to get there sooner to their big picture goal, they'll reallocate those tertiary assets, or they'll even just sell the secondary assets and build the farm. So there's a little bit of flexibility in the strategy here. I just want to acknowledge, though, that you're doing the yield on yield on yield, and then with the fractional gains that you get from over here, you can put those back into the main farm. Again, 100 acres, 120 acres, 160 acres, 220 acres, 300 acres. Like, just keep growing it, and then it accelerates the rate at which your secondary and tertiary assets are growing. Makes sense? Clear as mud? Fantastic. We'll come back to this diagram real quick, but I wanted to, first of all, give you the example. And I guess, J.I., how do we begin to create a liquidity pair? I like the idea where and how do I do it? Perfect question. That's exactly what we're going to do next. I'm going to show you click by click how to create a liquidity pair. And has anyone done this before? Yes, a lot of people have done this before. The example I'm going to show you, you'll see there's something like 40 million of liquidity already being provided to the system. So it's a very safe and reliable system. And I've done this before, and literally everyone in the mastermind has also done this. Okay. So the mastermind is it's a lifelong membership to a community of other patient and like-minded investors. And we work on strategies like this. We show you how to build it. We build it with you, and then we help you maintain it over time. So let's see, I got to share my screen again here. There, and let me just pull this one over. Maximize it. Okay, cool. Now, I will tell you, hide that. I'll tell you ahead of time. I can't go back all the way and start from scratch. Starting from scratch would be like open an account on a centralized exchange platform like Binance.us, tie that to your bank account, whatever denomination you're in, send fiat currency to that account, swap that fiat currency for crypto, and then send that crypto to your MetaMask wallet, okay, which is the MetaMask wallet here. This is my demo wallet. Okay, so what I've got right now, I've already sent my BNB to my MetaMask wallet. That is where we are going to pick up on this demo, okay? I am currently on, well, let me go back to the home, app.nightswap.financial. So this is a DEX, a decentralized exchange platform. You can see currently the total value locked on just this one DEX is 265 million. That's very good for how old this DEX is, but it's very low compared to, for example, Pancake Swap, which I haven't even checked it recently. It's probably got billions and billions of TVL, total value locked, meaning across the entire platform, how much value is actually staked for the use of the system, okay? So app.nightswap.financial. And what I'm going to do is come to the farms tab, and I can look and see that there's this farm. This is the example I'm doing today, Guard BUSD. Why those two assets? Because it is a stable asset, a stable coin in the form of BUSD, which is always tied to the US dollar, so it's always going to be stable. And then Guard or Guardian, which is a treasury asset. I'm going to show you the chart on Guard only because I want you to see the rationale behind this and the performance of this asset to date. If you can see this, you can see that it was very stable in the early days, which is good. You don't want the moonshots right away. And then over time, it just gradually, for crypto, this is gradually appreciates, tiny little dip here, then it stabilizes, then it appreciates, little micro dips, then it really goes up, little dip there, then it goes up again. And now it's in a period of stabilization, okay? Currently, we're at about $4.39. This has a lot of room to grow. So if I was looking at it at scale, it would look more like this, which makes it look almost like a flat line, but it actually is just a slow and steady appreciation over time. And then I also wanted to show you that there is currently about 41 million in liquidity locked up into this project on a market cap of just under 220 million, meaning very safe, very stable, and not volatile. This also meets all of the criteria that I had shared with you earlier in the presentation, including me connecting with and knowing the people who are involved on a leadership level, which is what gives me such confidence around it. And I understand that at first you might not share that confidence, but that's when we could look to the performance of the asset over time and go, look, if this thing is appreciating at a rate where it's more than doubling every single year, it's probably one that I should be looking at, especially because it's appreciating without that wild volatility and without the sharp, crazy drops that most crypto projects experience over time. So that's why, just in a nutshell, that's why we're dealing with this LP liquidity pair. So I'm going to go to trade, exchange. Now, I'm only going to be doing a small amount today so that I don't have to dismantle my entire farm and rebuild it and dismantle and rebuild it. So I'm just going to be doing 0.1 BNB, but you would take whatever amount you're starting with and you would split it in half. So if I had 50 BNB, or let's say I had 51 BNB, I would do 25 BNB in guard and 25 BNB for BUSD, and then I'd have 1 BNB left over for transaction fees. So, but in the case of this, just for the example, I'm going to do 0.1 BNB, and then I'm going to select guard. Now I already have some in my wallet, but for the sake of the demo, I'm going to swap it. And normally, if you were doing this for the first time, there would be a little button here that says like approve contract or something like that. You could click that, approve, confirm in your wallet. But I'm swapping 0.1 BNB for 9.88 guard. I'm going to click swap, confirm swap, and then my little MetaMask pops up over here, and I click confirm transaction. Okay, close. Now, I'm just going to be patient, wait for a little bit. That transaction has to go through. Sometimes it takes 3 seconds, sometimes it takes a minute or two. It depends on the congestion of the network at the time. Okay, it went through because see how I have 0.1 BNB less. So now I'm going to go, oh, there it is. There's the confirmation. 0.1 BNB. Now I'm going to swap for BUSD. And it's going to say, all right, 0.1 BNB is worth 43 BUSD. I'm going to swap, confirm the swap. And then here we go in MetaMask. I'm going to click confirm. Transaction submitted. And again, I will wait patiently for that transaction to go through. AJ, just like in crypto, projects fail or we have rug pulls. Is it possible that the DEX primary asset fails at some point and we lose our investment? Conceptually, AJ, yes, that is like possible, which is why you want to look at things like TVL, total value locked. This is not loading. Let me refresh the page here. This particular DEX has over $265 million locked away in it. And I don't even know how many actual humans that represents, probably quite a lot. So basically, everyone would have to pull all of their capital out at the exact same time in order for this project to tank. In other words, this one's not going anywhere. And yes, at the moment, it's not as big as like Pancake Swap or some of the other bigger DEXs, but it's probably won't surpass Pancake Swap, but it does have a shot to become the number 2 or 3 DEX on the BSC network, which is not insignificant. So to your question, is it possible that something like this fails? Yeah, but not likely. I mean, is it possible that Tesla fails? Sure, but people still invest in it because they believe in the future and they believe in the project. So this all comes back to, I'm sharing with you my opinion. I'm sharing with you an example. At the end of the day, you have to be convinced that this is the right project for you. And there are other farms on here. Doesn't have to be this one. And you could go to other DEXs if you personally felt more confident in those DEXs. All right, so I've got my trade. I've exchanged. Now I'm going to go to liquidity and I'm clicking add liquidity. Remember, this is where I am adding value to the ecosystem by providing liquidity to the platform. I bought some guard. I bought some BUSD. I'm going to max out my BUSD. So I'm going to pair up 9.9 guard with 43.46 BUSD. That is an equal amount in terms of their US dollar value, but different amounts of tokens of the two assets. I click supply. I'm going to get 19.8623 LP tokens, liquidity pool tokens, and that will be a fractional percentage of the pool because the pool is, like we saw, just over 41 million. So I'm providing a fractional percentage of that pool. Okay. And then I will pause and be patient and let that transaction go through. Okay. And it looks like Will, I see your hand, and I will pull you in here to the room in just a second, Will. I want to give this an opportunity to finish up first. But I do see your hand up. Thank you. Okay, so there's my liquidity pool tokens. Now I'm going to go back to farms. If this was the very first time I was ever doing it, it would have this little button here, approve contract. I would have to do that first. It's basically just giving the contract permission to access my wallet. but instead I'm going to click plus, and I'm going to add my 19, confirm. And if it was your first time doing it, it would say stake instead of plus, but same action. Okay, and there, now it has added to my guard BUSD LP. Now in this example wallet, this particular one, the total, it just tells you what the total current value is on this one. This is just kind of a farm that I play around with, so it goes up and down in value all the time. And then what's going to happen is after you have staked, now you'll see night earned. There was a number there before I harvested it. Now this is going to slowly rise over time, and then that will produce what in effect becomes your secondary asset. There we go. I just earned a 1/1000th of a night token. So you would leave that for a few days, depending on how much you're starting with. Like if you're starting with a lot, then you can come back and harvest this once a day or even twice a day. And then after you've harvested it, you come over here to the night raids, and you can choose one of these pools to get a tertiary asset, okay? So you could go straight for more BUSD. You could pick one of these others, and this would be, again, more like personal preference. You got to understand these projects. For me personally, I just stake it all back into the guard pool because I just want to accumulate more and more guard over time. And then as I do that, I pair it up with BUSD and I just add it back into my primary asset, my farm. 100 acres, 110 acres, 150 acres, 200 acres. I just keep building it over time. And then over time, the rate at which I produce my night, my secondary asset, will also quickly appreciate over time. Okay, let me pause there. And we'll pull this back over here so I can look forward. And, oh, Will, okay, you can wait until the end. That's fine. We're actually almost to the end of presentation mode anyway. Just to quickly recap, primary assets, liquidity pairs, that's what I just showed you how to do. Secondary assets, in this example, that would be the night token. So you'd harvest the night, stake it, and then tertiary assets would be one of those night raids. They're pools. Or instead of a tertiary asset, you could just put it right back into accumulating more of your primary asset. Okay. All right. Well, live demo, we already did that. That was the fun part. Okay, so Will, if you want to jump back in to the speaker room, then I can pull you into the, oh, you got the question here. Do we know why at times the APY seems to slow at times? Yes, great question. I wasn't going to bring it up because it's a little more advanced, but we can talk about it. You'll notice, and let me just share my screen again. Woo, infinity. You'll notice that on the farms, it's initially going to say APR, which is different than APY. APR is the rate, APY is the annual yield. And when you click on, like, let's take Wizard BNB, for example, it says 174% APR, but if you compounded that daily, you'd get an APY of 468%. Okay, so typically APR and APY are different. Now you might look at this and say, huh, 8.33%? And an APY of only 8.68%. Brandon, I thought you said we were going to double our money every year. Yes, here's the thing. APR, and this is why you never want to chase APR, and I can tell you a story about when I tried to do it that way, why you never want to chase APR, because this is only one variable of a multivariable equation, and it's only this moments in time representation of that one variable in a multivariable equation. So the rate right now at this moment in time at which I'm producing nights might be right now 8.33%. But as my guard appreciates, the total value of my farm appreciates along with it, and I'm also yielding night, and I'm staking that night, earning my yield on yield on yield, and that takes time to build up. But all things accounted for, all variables considered, that's where when I tell you in 6 weeks I got the 108% return, that was because all things accounted for, I got the 108% return. The other thing I didn't mention, because it gets in the weeds a little bit, is that by providing liquidity, you also get a fraction of the transaction fees of this pair when it's traded, because you are providing liquidity to the DEX. So value of the assets as they appreciate, value of the farm itself, participating in liquidity gets you a portion of the transaction fees, plus the secondary asset, the night that you're earning, plus what you earn by staking the secondary asset. So there's all of these variables involved. That's why if you just look at this number, it can be very deceiving. Quick story. Before I was acting responsibly and I was an APR chaser, I saw this one that was insane APR. I was like, great, let me put a whole bunch of money into it. And for the first few days, I was like, whoa, these returns on a daily are like so amazing. But then the asset itself that I was farming with started to tank a little bit. And I saw the writing on the wall. Luckily, I was able to get out before I lost anything on it. But it ended up tanking over 99% and just like flatlined at the bottom. So would you want to put a bunch, like if you put $1,000 in, would you rather have 10% APR on that $1,000, or would you put the $1,000 in, it tanks to $1, and you're getting 3,000% on the dollar, right? It doesn't make any sense. It would make more sense to keep the primary asset as stable as possible and focus on that, as well as the multifaceted variables that are involved in the equation. That gets into the weeds a little bit, so I apologize if that was like, Brandon, that doesn't make any sense right now. All I want to tell you for now is don't get sucked into chasing the APR, because it's a one-dimensional approach. It's the equivalent of the day trader approach, right? And some people will teach this. They'll be like, find the best APR, farm for a week, then pull it out. Now go chase the other best APR, farm for a week. It's just a different type of day trading, meaning you're glued to the screen. You're always watching stats. Basically, all you've done is given yourself another part-time job. This approach is very value investor mindset, meaning we're finding things that we don't have to micromanage all of the time. Okay, that makes sense. I also have one more. When providing 2 takes and receiving 2 takes, I'm not sure, maybe does that mean tokens? How do we determine how much will grow? I mean, if the percentage is 1,500 and you get 2 tokens, do they both get 1,500? Yeah, providing 2 tokens, receive 2 tokens as an award. It's not a one-to-one relationship like that. So you are rewarded according to the total pool. So in the case of Guard BUSD, it's a big pool. So the more I provide, the more percentage of that pool I get to participate in. So if I have half of the pool, if it's a $50,000 pool and I have 25,000 of that, I'm going to get half of the tokens that are emitted for that specific pool. There's a lot of different math you can do to try to figure all of that out. It's very tedious and mind-numbing, and it's beyond the scope of the workshop today. But I'll just sort of as a general answer, it's not a one-to-one ratio, but you're rewarded according to what percentage of the pool that you provide. Okay. If you have a question, now is the time. Go ahead and drop your questions in the chat and we can address all of them. I always leave we went for about 70 minutes. That was actually pretty quick. I thought it was going to take us about 80. But I've left some time at the end here and we can just keep jamming with Q&A if you would like to. But I also, of course, want to tell everybody about the mastermind. Okay, the mastermind is a community that I have curated and put together where there are many other value-minded investors that leverage this approach. Is this the only asset that we buy? Of course not. So the mastermind itself meets on a weekly basis. We deal with a number of things. Number one, the basics, especially right when you join. Nuts and bolts, build my farms. How do I set this up? What's a wallet? Like, yes, for the people who need the basics, we're going to walk you through step by step the basics. Okay. Typically in the first 30 days, I meet with you one-on-one in order to make sure that you have all of those things set up. Okay. I'm going to give you like, boom, boom, boom. Here's your first 5 action steps, which might look very different than someone else's if they've been in crypto for longer than you or whatever it is. Okay. So yes, that is part of it. And then we also deal with troubleshooting, security issues. There's a lot of scams in crypto. So I teach you how to avoid those scams, what to look for, what to click on, what not to click on. If you do click on something that accidentally gives someone permission, how do you avoid that and cancel that out? Just like little nuts and bolts and troubleshooting things like that that come up. And then together as a community, we take a look at new projects that are out there. I'm going to show you what I'm invested in. I'm going to tell you why I'm investing in it. And I'm going to tell you why I'm not investing in other things. By no means is anything that I say the promise or like calling the moonshots, right? You'll see a lot of masterminds out there that are like, I'm so good at calling the next big coin. I know the secret sauce and I can look at which projects are going to be big and I'm going to tell you which ones they are. Nobody can do that with 100% accuracy, okay? Yes, some people are good at finding those out, and we are going to look together and evaluate projects based on some of the criteria that I laid out, and I'm going to tell you if I invest in something or if I don't. You don't have to follow along with me, but you certainly can, and it most likely will be to your advantage if you choose to. You'll get access to our private Facebook group. You'll get access to our private Telegram group, which is an announcement channel and a group chat. So you get to connect with everybody else in the community and you get to chat with me directly. Okay. So I'm involved 100% in this. This is not a thing where I just farm it out to someone else. You get to hang with me. We get to jam together, sometimes on Zoom, on the weekly group calls, sometimes in Telegram on the chat, but whatever the case, whenever you have a question, whenever you have something trouble, whenever you have a bump in the road, you jump in there. We had, who was it? A couple weeks ago, someone said, I've made more progress in the first 3 days here than I had in the last 3 years. So it's that feel where rather than struggling on your own, right? The Lone Ranger approach, rather than struggling on your own for years and years, trying to figure it out on your own, jump in the mastermind, hang out with a bunch of people who have been there before you, who know how this process works and can show you at first, hey, these are the reliable, stable farms that you definitely want to be involved in. And then together, we're going to look at other projects to potentially diversify your portfolio, depending on how much time and bandwidth you have to invest in this whole process. What is the ultimate goal? Yes, we're going to learn, but ultimately the goal is the example math. The goal is to double your money every year, year over year, so that you can achieve whatever that big picture goal is for you. This is not a course. I don't give you 80 hours of videos and you got to go watch them and learn them all. No. This is an action-oriented mastermind community, meaning from day one, we're going to get to work, set up those farms, get you yielding as quickly as possible to put you in profit as quickly as possible. I'm not going to make some outlandish claims about the results of this group. I can tell you that on average, the people who have joined in the last 60 days, they have doubled their money within 30 to 60 days. Okay. That's not a promise it's going to happen again. I'm just saying, I'm acknowledging the results that we've gotten so far in the last couple of months. And what else was I going to say about that? I had another thought. Now it slipped my mind. So anyway, point is, we're going to set you up for success. Oh, this is what I was going to say. I can say with confidence, literally no one has lost any money. And if you have been in crypto for a while, you know that is not insignificant. Like that is madness, like on the good side of madness. To be able to claim that literally no one has lost money with this methodology is wild, because most of crypto is hype. Most of crypto is volatile. Most of crypto is like, well, you win some, you lose some. That's not the approach here. The approach is slow, steady, reliable, patient, and gradually increase and multiply your wealth over time. So what I'm going to do, and I'm new to this software, so I apologize if I click the wrong button here. I'm going to, this should be start offer. There we go. Okay. So there should be like a little shopping cart icon, okay, somewhere on your screen. It says offers, okay. I've put the offer live now, and it says apply for the crypto mastermind. You just click that, and it is going to redirect. Oh, wait, sorry. Publish. There we go. Okay, now it's up. Now it should say apply for the crypto mastermind. And you just have to click apply now. It's going to redirect you to a form. You fill that out. That goes directly to me. I get that in my inbox. It gives me a little notification. Hey, so-and-so is applying for the crypto mastermind. And then you'll be redirected to a page where I think it might direct you to join the Facebook group. And then you should get a follow-up email with a link to book a call with me. If you book the call, that's great. But just by applying, I'm going to give you a call anyway. And the point of the call is to chat about if this is the right fit for you, okay? So I've already given you all the details. I will tell you ahead of time, the lifetime access membership, it's a 5K membership, okay? One payment of 5K, or you can split it up into 2 payments of 3K each, so the total ends up being 6K. It's 3K down and then 3K 30 days later, okay? So I'm pulling no punches, completely transparent. You know what it is, and you know what the potential return can be for you. Okay, so if you're thinking, well, Brandon, how long till I make that 5K back? I don't know specifically. It depends what you start with. If you start with 10K, it is likely that you will make back the 5K investment into the program within the first 90 days. No guarantees, obviously, no promises, but it's likely that that's a reasonable time frame inside of which you can make back the cost of tuition into the mastermind, okay? So like I said, lifetime access. We're going to focus on action. This is not a course where I give you a bunch of material and you get bogged down by information overload. This is a mastermind where we get to work right away. You have my support, you have the support of the community, and ultimately you get to connect with other people who are savvy investors like you who know that they're in this for the long haul. It's not an 8-week course. It's not a 12-week coaching program. It's lifetime access, meaning that I'm in this for the long haul. Everybody in the mastermind's in it for the long haul. If you're serious about being in the crypto game long term, which in my opinion you should be, because this is a revolutionary technology, you want to be a part of a community where you can consistently connect with other people who will support you, as well as people who have been where you have not been yet, who can show you that path. Justin, so the mastermind is 5Gs. Yes, it is $5,000, or you can split it into 2 payments of 3K each, in which case the total then would be 6K. And like I said, next steps, if you're interested, and maybe you're not like completely convinced yet, okay? Usually after the workshop, people are in one of 2 camps. They're like, okay, I get it. I see the value. I want to put my 50K in capital somewhere where it's going to multiply wildly over the course of the next 5 to 10 years. Great. Sign me up. I'm ready to go. Okay. That's the one camp. The other camp is like, maybe, but I still have a few questions for Brandon directly. I want to chat about like my specific situation and if this makes sense for me. Yes. So either way, click the apply button on the offers tab. Like I said, it's that little shopping cart there. Offers tab, click apply now. Quick survey. Okay. Just a couple of lines, a couple of questions to answer. You'll put some contact info in there, and then I will reach out to you, and then we can chat probably just for about 15 or 20 minutes. Okay. These are not going to be long drawn out calls where we get into every detail. We just real quick, hey, what questions you have for me? What about your situation? Is this the right fit for you? And then ultimately you can decide whether or not you're going to jump in fully into the mastermind. So Justin, thank you. Awesome question. Who else? Who else has questions? We can hang out for a little bit. It can be about the mastermind, or it could be about the content that we covered today as well. I've still got about 10 or 15 minutes if there are questions. Okay. If nobody wants to ask a question right now, then I would just close up shop early, and I'll chat with you guys after the fact. For those of you who are ready to jump in now, I will also include this. Like I said, that offer, you can book a call with me. Like we can talk directly. That's fine. But anyone who is just like, cool, I'm ready to rock, like sign me up, ready to go. I'm going to put a link here. That is the checkout page. That's the official registration to join the lifetime membership of the mastermind. But what else? Friends, questions, thoughts, maybe just, hey, your general impression of the information. Like, was this helpful for you? Was this a review for you? Or was this like light bulb moment? I've never seen anything like this before. I remember the first time I saw a farm created, I was like, what? I didn't even know that was possible. Like, I totally used to play the one-dimensional day trader game, which is just like, look at the screen, buy low, sell high. Yay, I made $100 today. Like, let's do it again tomorrow, like that kind of stuff. And it's just, to me, it's so mind-numbing and time-consuming. I wanted to get away from it completely. And so that's when I found this approach, and I was like, okay, this is actually the future of value investing in the world of decentralized finance. Will, if we come across a good farm that you guys aren't doing yet, can you look at my farm to make sure I'm getting it? Yes. So part of the mastermind is we evaluate if you have current investments or if you're looking at new investments, we evaluate those together. Sometimes I will bring some to the table. Other times, and that's part of the value of being in a community, other times people who are a part of the community will bring projects to the table and just say, hey, everyone, take a look at this one. Like, what do you think about this? And that's actually how we found one recently. This was about, I think, 3 or 4 weeks ago. One of our members, Paul, brought something to the table and said, hey, buddy of mine tipped me off to this. I did some research on it. Here's what I discovered. What do you guys think? And that prompted a few of us to go and start looking at it, researching a little bit. And ultimately I said, you know what? This looks like a good, very long-term project. Like, I don't think it's going to moonshot anytime soon, but it looks like something that I feel comfortable, with my speculative play money, like, I'll put $1,000 in, not a lot, but something that just like, I'll put it there. I'm going to leave it there long-term, and probably like 5-6 years later, check back up and see, ultimately what the return is on an investment like that. So yes, we look at farms and we evaluate. Mainly, we're looking for what's the stability of the project, and is it something that's going to be around long term? And that goes back to our original lens, our original criteria, which was who's leading this project? Is it stable? Is it a long-term viable solution for humans, or is it just a one-dimensional project that will probably tank very soon? One of my mentors likes to say, incompetence and malice often look the same. Meaning that in the world of crypto, yes, sometimes you do get scammers and rug pullers who are intentionally screwing people over, but more often than not, you get people who are just kind of incompetent and they're trying to do a thing that they don't really know how to do, and they end up screwing a lot of people over, and people get very, very angry, which is why we want to evaluate who's involved, who's leading the project. Are they competent? Are they a good leader? What else? What else, friends? Got a couple more minutes. And you know what? You can always connect with me after the fact on Facebook. Let me drop my URL. Facebook URL. right there. If we're not already connected on Facebook, if we're not already friends, send me a friend request. And hey, if you don't want to book a full call and chat with me, like we can chat on Messenger too. It doesn't matter. It's either way. But friend request, and then if you're not in the Patient Investor Facebook group yet, I can give you the link to that and approve your request to join. That's the freebie group. The Patient Investor is the freebie group. And then when you register, when you actually join the mastermind, there's a different group of just the paid members, private group. Cool. All right. Well, it looks like there are no more questions for right now. So I'm going to go ahead and wrap this up. And I just want to say thank you, everyone who joined us for the presentation today. You've got all the information that you need to connect with me after the fact. Any questions you want to ask about the mastermind specifically, and we can just jam on all things crypto and investing. So my sincere hope is that you got something out of this today. I am going to send out the replay. So if you want to follow along the demo, then make sure you're looking in your inbox and check your spam or promotion folders too. I forgot to mention that before. Sometimes, like if you're getting emails from me for the first time, they'll default. It's like with any subscription, they'll default to the spam folder until you pull it out and say, hey, this is not spam. And then you'll continually get those emails. But I'll send the email with the link for the replay. Strongly encourage you, not just the demo section, but if you are new to this world, like watch the whole thing all over again. I know for me personally, maybe I'm a little slow learner, but it took me like 4 or 5 times consuming this type of content before it finally started to click, because it is like learning a brand new language. Okay, so I strongly encourage you, go back, expose yourself to this material as often as possible. Don't think that watching it once means you've got it down. Watch it again and again. And otherwise, thank you again for joining, and I will see you all in the mastermind. Have a good day.